Now, before you click away, don't worry. This isn't a scary form or complicated tax codes. I'm going to show you how to avoid an audit with simple, practical steps that anyone can follow, even if you're not a tax professional. Welcome back to the channel. If you're new here, I'm Joe, a licensed, certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Today, we're talking about something that makes a lot of people nervous: tax audits. Be sure to like and subscribe to the YouTube channel for more videos. And check out our blog site where we post every Monday, Wednesday, and Friday. You don't need to know everything about taxes to protect yourself. You just need to know what triggers an audit and how to keep your return clean, accurate, and low risk. So grab a coffee and let's get started. First, let's demystify the audit. Most audits aren't random. They're triggered by patterns that the tax authority's computer system has flagged as an unusual. Here are some of the most common triggers. Usually, if there's a big change in your income or deductions from last year, that's going to trigger a red flag. If you're missing or have mismatched income, like forgetting to include a 1099 or W 2, that will trigger. Claiming a very high deduction compared to your income. If you have some kind of math error or you're missing information. If you're repeatedly filing amended returns. And if you're claiming refund credits like the earned income tax credit without enough proof. Basically, if something on your return doesn't add up, the system might flag it. The goal is to make sure your return looks consistent, complete, and believable. Another thing that's not on the screen but that will trigger audit is usually if you're changing dependents. So if you're going from one parent to another parent after a few years, that's going to trigger an audit right away. And you're going to have to provide proof to the IRS. The single best way to avoid and survive an audit is to keep good records. You don't need a fancy system. A simple folder or a digital file for each tax year works great. Here's some of the items that you should save: receipts for deductible expenses, bank and credit card statements, pay stubs, your W 2s and 1099s, mileage logs for business or medical trips, proof of charitable donations, contracts and invoices if you're self employed. Keep these for at least 3 years or longer if your situation is complex. Think of it this way: good records are your audit insurance. You hope you never need them, but if you do, they'll save you time, stress, and possibly money. You can't prove what you can't show, so store everything neatly, digitally, or on paper. Most audits start with simple mistakes. This means accuracy is your best defense. So, here's what to do: double check your social security numbers and math. Make sure your income matches what's reported on your W 2s or 1099s. Don't round numbers too neatly. Real data rarely ends in zeros. Be consistent year to year. If your deductions suddenly jump, make sure you can explain why. Even small errors, like transposing numbers, can cause issues. If you're using tax software or a preparer, review everything before you file. Your name is on the return, and you're the one responsible for it. We all love a good deduction, but aggressive claims can make your return stand out. Here's a few common red flags and how to handle them safely. Home office. Only claim the space if you used it regularly and exclusively for business. Measure carefully, don't guess. This is probably one of the biggest things that would trigger an audit. If you have a home office, you cannot have any personal belongings inside the office. So that means no pictures, that means no personal memorabilia. It has to be strictly for work. Charitable donations. Make sure you keep receipts and don't overestimate the value of the items you donated. And remember, you only want to give to those charitable donations that are qualified, because not all charitable donations qualify for the, the itemized deduction. Business meals. Write down who you met with and why. Usually only 50% is deductible, but keep good records. Vehicle expenses. Keep mileage logs or use the standard mileage rate, whichever you can justify. And remember, if you can't prove it, don't claim it. It's that simple. Honest, well documented deductions save you money and make your return look professional and credible. Now, if you're self employed or work in a gig economy like a freelance design, rideshare driver, or online sales, you get more deductions, but also get more scrutiny. Here's how to stay audit safe. If you can, keep separate bank accounts and credit cards for your business expenses. You want to keep your personal and business separated as best as you can. Remember to track all your income. Even if you don't get a 1099 for it, you still want to track it. Save invoices and client communications. You don't claim every personal expense as business related. This is probably the biggest thing when people go on vacation, when they out for meals, when they're traveling, is you can't claim every personal expense as business related. I can't stress that one enough. Be realistic about the profits and loss. Too many losses years can raise eyebrows. When your records are clean and your business finances are separate, your return looks legitimate and professional. Freelancers get more deductions, but also more scrutiny. Clean, separate records makes your return look professional. If you use a tax preparer or an accountant, great. That can reduce errors and stress. But remember, you're still responsible for what you filed under your name. Choose a preparer who has proper credentials and reviews, explains the deductions and credits they're taking. They give you a full copy of your return. Don't promise a huge refund or charge based on the refund size. And before you sign, read it. If something looks off, ask. You don't need to be a tax expert to notice when something feels wrong. Even with perfect filing, audits can happen. If you get a notice, stay calm. Here's what to do. Read the notice carefully. It'll tell you exactly what is being questioned. Gather your documents. Only send what is requested and make copies for yourself. This is one of the bigger ones. Respond on time. Most issues get resolved quickly if you cooperate. And get help if you need it. A CPA or a tax attorney can handle complex cases or speak for you in front of the IRS. Ignoring a notice is the worst thing you can do. It turns small problems into big ones. Professional, timely responses usually set things fast. Alrighty, let's wrap things up here. Here's your quick audit proofing checklist. Remember to report all income from every source. Don't forget to double check names, social security numbers, and math. Always keep receipts and statements for deductions. And if you can, separate your business and personal accounts. Remember to avoid inflated deductions or perfectly rounded numbers. Remember to always use reliable softwares or a trusted tax preparer. Keep your records for at least 3 years. And if you get a notice, remember to respond quickly to any notice. Keep this list handy when you file. It's a simple, powerful reminder of the basics. So here's the bottom line. Avoiding a tax audit isn't about fear. It's about being organized, accurate, and consistent. Good records, honest reporting, and smart preparation make you a low-risk filer. And if an audit ever does come your way, you'll be ready. Remember, your goal isn't to beat the system, it's to play by the rules confidently. That peace of mind is worth far more than any risky deduction. You've got this. File smart, stay calm, and keep your records tight. Thanks for watching. If you found this helpful, give it a thumbs up.